yo, yo. Hello, hello, hello. Hello, guys. Hello, guys. Hope everyone's having a great day. Feel like today's going to be a decent day, guys. Just pulling up my chats here, so just bear with me. Pop up the chat there, pop up a chat there. Refresh this. Streaming. Very good, very good, very good. Let's throw a little background on. Girl, I got you so high. I know you lie. Just do a little background music.
Welcome back to AI
channel where come with an
forming the way
adverts. Right. Let's get going, guys. Trading view. Okay. Let's first check the news. Economic calendar. We look at today. We look at put the correct time. There's Canadian unemployment rate. There is United States, Michigan consumer sentiment at 10 o'clock. The unemployment rate for Canada is at 8:30. So that's in 17 minutes. So let's see how that's going to affect the markets. Hopefully we'll do our top-down analysis. For those that didn't know, we called out this trade, or I called out this trade yesterday. Okay. I won't get into all the details as to why I called it out, how I called it out. If you want to, you can ask, and I will go through and break it down if you really want to. Okay. But I spent a lot of time explaining yesterday why. Look at all this consolidation, guys. Look at this. Bunch of consolidation. Okay. So let's put this app back on. I mean the indicator. Consolidation, manipulation. This could be distribution down to take the previous day lows. Okay, so let's not start with Euro. Let's start with NASDAQ. Okay. Let's take away this since it's already old. This is not relevant. This is not relevant. This is not relevant. Okay, we start with our... This is not... Actually, this is relevant. Okay. Let's start with the daily. The daily, we've got previous day highs and we've got previous day lows, which the app will draw them up on the chart. Okay, then we go to the 4-hour. Respecting a 4-hour fair value gap, pushes up. Chances are we're going to come to take previous day highs and then decide from there whether we're going to come down for previous day lows or we're gonna push up from there. So that would be my guess. Respecting a 1 hour fair value gap, as you guys can see. We've inversed another 1 hour fair value gap, which means there's a very good chance that longs are gonna be up, and we're gonna push up into this area here. Okay, which is London highs and Asian highs, and a very good chance from there to go to previous day highs. Okay, so let's go to our 15. Knowing that we respected an hourly fair value gap here, and that we inversed an hourly fair value gap here, if this 15-minute inverses here, then there's a very good chance again that we're going to go straight up. So we go to the 5. Right. Now, here's where you guys see the second indicator, okay? This is, again, you guys that don't know, this is the hour and this is the 4 hour, right? So there's the current price with this candle, and this is the current price with the 4 hour. The reason why I have this here is because it shows me, like I've just said, instead of drawing the hourly fair value gap here and here, I have it on the chart there. So this came down into this area. You can see this here. It then bounced off, inversed this fair value gap here, which is here, right? And now we are moving up. So if, for example, this hourly candle goes up and closes here, for example, it then creates another fair value gap for the hourly here. That then can come down and test and then go up again. So that could happen. So you could get a retracement down into that fair value gap area for a bounce to go up. Okay. And it is so hot here by me, guys. It's insane. Like, I am sweating. All right, so what I also want to do is look at ES to see if ES is moving in the same type of pattern flow. It sort of is, okay? Okay, so ES is following NASDAQ more or less the same way, right? So that's good. So I would say that our targets, let's just get rid of that because we kind of know already. Our target is previous day high, previous day low. However, okay, so that's what we target every day. We know that already. If you've been on the stream, you know that that's the main target, right? However, if we form a fair value gap here and the price ends up closing here with this hourly candle, right, which it won't do because there's only 40 seconds left, but it's still forming a fair value gap, then I'm going to put another circle here, there, okay, because I feel like price will come down into this area, okay, because there is a small fair value gap on the 5 here, but there will be a bigger fair value gap in 9 seconds. There'll be a fair value gap here, right? Exactly where the circle is. Let's see. What am I talking about? I'm going crazy, guys. I'm on the 5 minutes and I'm looking at the candle close. Never mind, guys. 39 minutes. Okay, 39 minutes. So I'll rephrase this because I had a peg moment, okay? I thought for some reason that I was on the hourly time frame and I was looking at the chart there and I saw the time go down and I thought, in 39 minutes, there'll be a fair value gap here if the price stays up here, okay? And then I would assume it would come into that fair value gap and either react and disrespect it, or push up to this area. That's my prediction with Nasdaq. Let's look at gold. Okay, let's just get rid of, what is this? Let's get rid of this because we don't need it anymore. This was a trade, a 1 to 2 trade that we called out yesterday that won. Okay, so I'm just going to cancel this, cancel this, cancel. I took a screenshot, guys, so if you need me to go through this trade and break it down, I will. So let's look at the daily. Okay. As you can see from the daily, each one of these candles is a day. So ever since down here, for example, we've just literally gone straight up, right? So this last month and a half, whatever, has just been straight up price action. Okay. All-time highs are at the top here, okay, which is basically you've got a strong draw in liquidity here. Why? Because you got a double top area here, equal highs. Okay, so previous day high is a strong draw in liquidity right now. It did not come and take previous day low, sadly. Okay, otherwise this movement up would be even more valid. There is a fair value gap below on the daily. So ideally, we would have come down further, take previous day lows, tap into the daily fair value gap here, and then start to move up. That's the ideal situation. Okay, but however, if you look at the 4 hour, we are now delivering from a 4 hour fair value gap, that strong death candle. Okay, which means the scenario that I just played out could actually still happen. Okay, so we could come down, take the previous day lows, and a little bit further into the fair value gap, right? So if we go like this, and we say this is a target, and this is a target. Why is it not letting me there? No, man, stop being a pig. I'll just do that. Let's get some emojis in the chat, guys. Let's get some hype going. Let's get some engagement going, guys. Okay, so we've clearly had a death candle down. It's come up. It's now taking 50%, or it's taking an area of the fair value gap. So now we could see a move down to take previous day lows, and like I said, there's a fair value gap on the daily, so around this area. Okay, so I'm going to put another circle here. Okay, so that's previous day low area. This is a fair value gap area. I'm going to go to the hourly. Let's just make this smaller. Okay, the hourly looks interesting. Okay, we still haven't inversed the hourly fair value gap. So when you close above on this fair value gap, then we will go bullish. The fact that we haven't still means that I think it's still bearish for now. Okay, short term. Of course, long term we're still bullish, but for a retracement, I would say bearish. If we can inverse this hourly fair value gap, right? So if you close below this fair value gap here, then we're going to come down and take previous day lows and maybe a little bit of the daily fair value gap area. Okay, so then I go to the 15. Okay, 15-minute fair value gap there. Again, nothing really changes too much. No, man, what am I doing? I would say this is a strong area here. We'll see what happens, but we've drawn up our targets and we will see if we get delivered from those targets or not. So when it gets down here, are we going to come down here, or are we going to bounce off this area and try to take previous day highs at that level? We'll see. Euro, reset chart view. We go to the daily. We're about to hit the news, guys, which is Canada news. Okay, that can be deleted. That can be deleted. That can be deleted. So the daily looks bearish, but remember there's a big fair value gap here that it's tapping into. So we could expect a small retracement up to maybe this area here, previous day high, and then a dump down. We'll see. 4 hours being tested. Could just continue. Hourly. I'm going to get rid of this because you don't really need it. This. Okay, I took screenshots of the trades I did yesterday, guys, so if you want me to go through it, just let me know. 15 minutes. I mean, you could make the case that this is an AMD setup. Okay, because you've got, let's do it like this. Okay, you've got accumulation. Let's do that again. Okay. Accumulation, manipulation, inversion. And then it even came back up to test it again and then starts to go down, right? Now, if you look at that pattern, obviously you can just take the Asia, okay? So if you get rid of that, it'll look like this. So if you just took Asia, this is what it would look like. Accumulation, right? So let's get rid of this. There's a fair value gap here. If you were taking the strategy, right? You could have entered right there, stop loss at the highs or above the body there, okay? And this would either be a break-even trade, because here to here you would be at break-even. So you would have either been stopped out at break-even, or if you didn't move your stop loss, then you could have made a 1-to-1 or whatever. So that would have been a winning trade or a break-even trade. Why would this be a valid trade? Because if you are trading London session, okay, you've now swept this liquidity here, this liquidity, all of the Asia liquidity has been swept. It's respecting a 15-minute fair value gap, right? So this is higher time frame, okay? So that's the 15 minutes. You are either, your entry looks like this, okay? So either you enter at the close of the candle and your stop loss is here, or at the top of the highs, which is way far away. So you'd probably go there, okay? And then you're targeting 1 to 3 or previous day lows, whichever, right? 1 to 2, 1 to 3, doesn't matter. So that's either your trade right there, okay? Or because it's London, you say, I'm waiting. You wait for this move down and you wait for the retracement up into this area. And then you take it here on this move down, okay? So you can either take it on the close there, stop loss above the fair value gap, or you take it as you start to see a move down, like over there somewhere, okay? So it all depends how you want to enter. Maybe there's a 5-minute that's a better entry. So if you go to the 5 minutes, you could probably see a better entry. So yeah, you could have done that. That's still valid. Okay. So you would have either gone 1 to 1. It could have been a winning trade from 1 to 1. Or a 1 to 1.5. Or a 1 to 2. Right? So this would either be a 1 to 1 trade and you would do well. Or you would be stopped out at break even right now. Because we came down, swept the lows, the Asia and London lows. So you would definitely be at break even or you would be out this trade. That's if you are trading London and it was the AMD model. Why was this a decent setup? As I said, you swept internal liquidity. You respected a 15-minute fair value gap. From there, on the way up, you left the fair value gap. You disrespected that same fair value gap. And your option was to either enter straight away at the candle close, or it was to wait for a retest and then a dump. So that was your Euro London AMD model that you could have taken. Not a 1:3 unless your stop loss is tight or tighter, then maybe you could have got a better trade out of it, but that would have been your safer option. Let's go back here. So not much happened during this Canadian news. I guess it wasn't that impactful. I guess we could do AMD as well. AUD, sorry. So we go top down, so we go daily. So the daily, we came down, we came up into a fair value gap, and now it's inversed. Or has it? No, it's respected it. So until it inverses this fair value gap, it's still technically bullish, right? A lot of people will disagree with that assessment because they would say, oh, but there's some big candles. Look at the candle wick here. In my opinion, until it inverses this hourly fair value gap, it's still bullish. we have a bullish move, momentum up, everything's bullish, and until this candle closes below, it's still bullish. Let's just go to the hourly straight away. So previous day lows is a target, of course. All right, so we draw our targets. What are we doing? Circle, we draw the circle, okay. Previous day highs, we draw our circle. Okay, those are our targets. We are delivering from a hourly fair value gap. We've come down. We are now delivering from a second hourly fair value gap. We've come down. So I think we are going to come down, test this area here, and make a decision from there if we're going to come back up to this fair value gap or this fair value gap. That's my opinion. 15 minutes, more or less the same. I don't see an AMD. This could turn into an AMD setup if it continues to go sideways like this. You could see a move straight down here, create a fair value gap in this area, come back up, inverses, and then we go. So this could potentially be an AMD setup that you see here. Okay. See how this does consolidate a bit? Then this pushes up, but there's no fair value gap to the left that it's respecting. Okay. So this inversion here, even though it does inverse down here, is not as strong. Okay. Which means you could still see a move up, up, up. So all of this is still considered accumulation. I would add that into the pile. Okay. From here, all of this is accumulation. So if you see a strong move down to take out London lows or to take out previous day lows, which leaves a fair value gap and then inverses it with like a V-shaped recovery, then you are going to most likely see a push up to previous day highs. In my humble opinion, my Pepeg opinion, which is not financial advice, it is just my Pepeg opinion. Okay, so let's go back to gold. Let's try Nazi again. What about gold? He says. I did gold already. There's a daily fair value gap where the circle is for gold. So if it comes down to previous day lows and still shows signs of going deeper, then this is the reason. It's because there's a fair value gap on the daily. Asia pumped down a bit, consolidated. Gold is difficult because, like, if you use the market maker model or that model there, you could go like this, fibs from there to there, and this would be an area of interest, right? But then you go, it's so close to the previous day low as well as the London lows that if it gets here, is it going to really react from there? It's interesting. But there's a lot of accumulation here. So what could end up happening is that this accumulation, right? You could see a shoot up, take this high, okay? And then create a fair value gap on the way up, invert it, disrespect it, and then we see a move down. Or we literally just see the move down until we get to the golden pocket area, or we get down to this area. multiple things are in play right now. So we've done top-down analysis for most of the pairs except GBP. Let's just have a quick look at GBP, JPY. If there's also a pair that, like, if someone new in the chat pops up and they go, can you look at this Forex pair? Then, yeah, sure. We'll just open it up and see. Let's look at the daily. Interesting. Respecting this hourly fair value gap. Very interesting. Hello.
Hello. How are you?
What's up? Good, good.
Good. So, I'm lunch.
Yeah, I'm streaming at the moment.
Oh, cool. Right. Mm. What time are you going to stream till? Later.
Depends.
Maybe 5:30. Are you free at 5:30?
Did she do it?
No. Mm-hmm.
Oh,
Quick and do.
it'll be open.
Yeah, 5:30 should be fine.
Yeah.
Yeah, that'll be perfect. Okay.
What did she? Oh. For those that don't know, it is my mom's birthday today, so we give her a clap. Give her a clap. For the whole one person or two people that are watching, we give her a clap. Come on. Come on.
Thank you. And I'm saying, I was like 5 o'clock the deadline, so
Mm.
let's see. We go on about 5:30. We get something for tonight, and we let us get a cake. I'm going to do it's just some donut.
Yeah.
Kids are walking on the snow with donuts. Okay, I'm going to be there.
Khan gives you a clap.
Aw, thank you, Kai.
She says, thank you, Khan.
Not him.
I don't know. He might be able to. I don't know. Sure he can.
Thank you, Kai. Love you lots.
Oh, he said he heard. Aubrey. Let's see. Let's see how these markets are going to react. So this is the hourly fair value gap that it didn't create. You see, the reason why I put this circle here, guys, was because if price was up here, if price stayed up here, it would have created a fair value gap here. And then I said if it does, then it's probably going to come back into that fair value gap. But now price is just melting down. So there's no fair value gap that was created. That's why that circle was there. Just so you know. News at 10. Yeah, I know. Yeah, buddy. News at 10. Started typing in the wrong WhatsApp group. WhatsApp channel. Well, this is the part where it gets a little bit on the boring side, guys. Is that there's not always going to be excitement on the charts. That's another thing you got to come to terms with. That it's not going to be exciting all the time. Sometimes we are going to sit here and the price is just going to be whatever the price is, and it's going to look boring. There's no excitement. There's no massive gaps that you're targeting. There's no, it's just going to be like that every now and then. That's just the way it is. This has swept the lows here and now is pushed up and is respecting a fair value gap here. Wait, where's my circles? Why don't I have... Oh well. Okay, but we are delivering from a 15-minute fair value gap. So here's another 15-minute fair value gap. So if it inverses this 15-minute fair value gap, there's a really good chance that it's going to come down to this area again or previous day lows. Since we are bearish on the 4 and bearish on the 1. Remember what I said, guys, if you took this AMD setup during London, you would either be at break even, you would have got stopped out, or you would have waited for the retracement and then you would have got in. So you would have been either a 1-to-1 or 1-to-2 trade right now. Gold is going. Yeah, bro. The hourly fair value gap that it's in right now needs to close below it. We're delivering from a 4-hour fair value gap. Look at that, right? So for those that aren't sure what this is the 4-hour candles. This is the 1-hour candles. Just convenient to see it on the side of the screen. And price has gone up into this 4-hour and it delivering from the middle of the 4-hour. At the same time, right? At the same time, we are in a 1-hour fair value gap. Which means we could literally respect this 1 hour and go up again and target these liquidity 1-hour candles. Or we can inverse the 1 hour and target this liquidity candle down here, which is where the London lows are. or we target the previous day low. That's on the higher time frames. That analogy can be broken down to the smaller time frames as well. If you look at the 3, 2, 1, I mean, it's just, there's no clear price action with a 1 minute to 3 minutes. So you kind of want this to be the case, and then it shoots down like this candle, and then it just continues to melt like this. That's what you kind of wanted to see here, but it's just playing games. Like it shot back up with this one candle, came down, it's going up, like it's just playing games. Euro is struggling between these two fair value gaps at the moment. And until it picks a direction from one of those, so if it closes below this or closes above that, then that's the only time where you can go, okay, that's the direction, let's see. Then it's going to target this high here if it closes above. And if it closes below, it's going to target this low here. That's my opinion. My humble opinion. This is Forex, guys. Remember, this is just Forex. It's not futures. Forex. Girl, I got you so high, and I know you like, so come on, push it on me if it feels alright. When prices chilling like this, I find myself wanting to talk about strategies, talk about some of the things that I've learned in the past. But I've been told I talk too much and then I'm irritating. So I don't want to be irritating. What are we looking for? I find myself looking at NASDAQ and ES and trading more the inverse fair value gap strategy. And then I find myself looking at gold, euro, and the other Forex pairs. And I find myself looking more on the AMD or power of 3. Which is not to say that NASDAQ, it doesn't form and it doesn't play out. Because a lot of people base their power of 3 strategies or whatever literally on NASDAQ and NASDAQ only. So you've just got to have both pairs have to be speaking to you at the same time. NASDAQ and ES have got to kind of like speak to you at the same time. Yeah, guys, so this is the boring part of the job, unfortunately. I can yap on for days, guys. You have no idea. I can yap on for days, but not every stream do I want to yap and yap and yap. I could, and I probably will when I've got like 100 people watching me all at once. Because there's interaction, there's questions, there's a whole bunch of things that are being asked and commented in the comment section. So it's a little bit easier to talk about subjects that people are wanting to talk about versus the stuff that interests me and only me. Girl, I got you so high, and I know you lie. Come on, push it on me if it feels alright. Okay. Girl, I got you so high, and I know you're right. Come on, push it on me if you feel good. Okay, so it looks like there's a little bit of action. We'll see if this comes down and inverses this value gap on the 15 minutes. Little bit of action, slow and steady. Okay, we're delivering from a 5-minute fair value gap. So if this inverse is here, then what are we? In consolidation. Oh, probably. Uh, yeah. If it is alright. No, she doesn't mind. Let's see what happens, guys. Let's see what happens. Okay, some people will probably look at taking this. 3-minute did not inverse. 2-minute did inverse. 1-minute did inverse. 5-minute did not inverse. So the 5-minute did not inverse on ES. The 5-minute did not inverse on NASDAQ. Therefore, this trade is not a valid long yet. 3 minutes, 2-minute. So on the 2 and the 1 it is, but on the 3 and the 5 it is not. So we'll see. We will see. Gold inverse. Huh? So about this fair value gap here on the 5. Look on the 15. Still respecting a 15. Still respecting a 5. Respecting a 3. Not sure which inverse you mean, bruh. Are you talking about this 2 minute? It could be like if you were a continuation, if you thought this was a continuation trade, but it's just, look at this fucking, oh, look at this chop. Look at the 1 minute, damn. How do you even decide what to enter there, bro? I mean, up here, maybe, but yo, down here, I don't know, bro. So respecting the 5, respecting the 15. Very interesting. Okay. Strong reaction from the 15-minute gap here. Let's see. So it's hard to take because it's there and not here. Okay, what did we say here, guys? We said earlier, if this closes below this fair value gap, then we're probably going to come down to this liquidity area here. Okay. So we'll see in 3 minutes. If it closes here somewhere, then that's kind of what you're looking at. Or it'll pump straight down to previous day lows. The only thing with this candle that's forming now on the 15 is that there's no real top wick, which is not good. Ideally, you would have a candle like that. A top wick, you know, there's a top wick. If this had a top wick and closed over here somewhere, even with the bottom wick like the way it is, it would still be much better. Get rid of that. Let's see. I think if it closes down here somewhere, it's a bit too far away for an entry. If it closes higher up, I might draw this up as a potential short. Let's look on the 5. You see, shut down a bit so far. It is coming, so if it comes up here, then you could look at something like this. Okay, stop above the high. Previous day low. So you could even go the bodies, not the high, to get your 1 to 3 basically. So you can look at something like that. And I'm going to reiterate this. This is not exactly one of the 3 trading styles that I normally do. I am merely drawing something up so that you could literally take a trade or look at taking an entry, not so that you have to take an entry or that you must take an entry. No. We're looking for a retracement up. Okay. This candle's going to close in 25 seconds. The 15 minutes is going to close in 20 seconds. Okay. So if this closes here somewhere, then I would suggest to maybe, well, I'm not telling you what to do. This reaction back up is not the best. Okay. So now you can do something like that maybe, and we'll see how this plays out. Okay. This could easily come back up into this area or tap us out, and then, yeah. And the reason why I would look at doing something like this is because, number one, on the 4 and the 1 hour, we are bearish. We swept Asia highs, we went up there, and now we came down. We came up into a good area here, rejected. Okay. And now there's still a lower low, higher low. So I think it has taken the lows here, right? So we are targeting there. So this one's like in the air, up and down. This is an uncertainty trade right here, or call out. Because if it works, it's great. If it doesn't, it's like, oh well, it's not one of the rules. I expect it to come back up into this area, right? And then test this area and possibly go down. That would be my expectation. Again, it could just come up and stop us out and then come back down. That happens all the time. I'm just having a go. I would never take this trade to start with, but I'm putting it on the chart to see if if this trade would target this liquidity and then come down to previous day low. This is more of a direction. Like I would like it to do this. Am I on a deal right now? I'm not sure what you mean by that. If you're asking if I'm in a trade right now, no. And this wouldn't be a trade that I would take anyway. This is me just telling you guys that if price reacts in this way, then I think it's going to do this. But if I was trading this trade, then no, I would not be in this trade. Even if it dumps now and works, it's not a setup that I would take. What are you waiting for? Me personally, I'm waiting for the previous day low to be touched. So I'm waiting for this area here more than anything else. So if it comes down to the previous day low, then depending on how it reacts from there as to what, if there's a strong reversal, continuation. But yeah. This, nah, this is just, like I said, this is just I explained my, the strategies that I use is inverse fair value gaps. So basically the same ones that Dodgy and Lewis use. And then I use, or I try and use the AMD model, or the power of 3. Okay. Which is not this. And this is not the inverse fair value gap strategy. And the third one is the one that is kind of like your maker, market maker model, using the Fibonacci retracement into the golden pocket. So it's just those three with the market structure shift, all that stuff. So it's a little bit of everything. Have I? No, well, that's the journey I'm on. I started this so that I can hold myself accountable, and we're on the road to becoming profitable. So no. I said when I first started streaming that this is a accountability thing. Like yesterday we were 2 for 2. So we had 2 call outs yesterday that were both winning trades. This is not a call out. This is basically me telling you guys that this is what I was hoping for. Because the market hasn't even opened yet. Okay, so we have an inversion here, which means this is completely not going to happen. Let's look. Let's refresh, see how many people are actually watching. Yeah, I think when a lot of people find out that you're not a multi-millionaire profitable trader, they go, okay, next. I don't really care. I didn't start this, guys, like I explained when I first started streaming. I did not start this to try and boast to people how successful I am. I started this because I had spent 4 years relentlessly trying to learn how to trade, and I have done so many different courses. I have done so many different discords. I've done like over 10 different strategies. I've spent months on each strategy, moving from strategy to strategy. And I said to myself that this is a way for me to hold myself accountable for when I start putting in live trades. And for me personally, I like to do these call outs, and then it gets your mind right to actually start putting in proper trades. Like we started trading in the beginning of the live stream, we were doing we were putting in a bunch of trades, and I was calling out about 6 entries for you guys on a daily basis. I was giving you guys literally like 6 different entries. 5 of them would be winners and 1 loser. That was consistently the style that, or the consistently the call outs I was doing for you guys. Now I don't want to just draw up entry after entry after entry like 6 different ways. Like for example, this one would have been here. Okay, stop above there. There's a break-even trade or a 1 to 2. Done. Okay. If I was online, I would have seen this. I would have drawn this up for you and gone, there you go. This is not an entry, guys. You can take it if you want. And I told you guys, it's entirely up to you. I'm drawing up what I think price is going to go to. Okay? It's that simple. In this trade here, if you want to be super, super safe, if you were in this trade, okay, the safest option would be above the highs there. Above that high there. That would be your safest option. I didn't really care because I'm not in this trade. So this, if you took it the exact same way I was, or the same way I drew it up, you would have been stopped out and then the trade would have moved in the right direction. And like I said to you before I even drew this trade up, I said we are targeting this area first. We are targeting this area ultimately. And when it gets to this area, then we will see what happens, if it's going to reverse up or if it's going to come down. Come on, push it on me if it feels alright. Don't put it on it, and you will play. Yeah, with this one, I still believe that the price is going to come down to here. We have an inversion on the 15 minutes. I spoke about this for like 5 minutes before I even put anything on the chart. So the fact that it's touched the stop loss means nothing because this is not an actual trade. I hope everyone understands that. This was me just drawing up where I want price to go to. Market is open. Let's see. A lot of consolidation here. I would like manipulation down in and then an inversion up. That's what I would like. I think this is confusing people. This is seriously confusing people. Ooh. Look at that. Okay, like I said, hopefully we can target previous day highs. However, if we sweep Asia and London highs, that is sufficient. It looks like ES is doing it already. So we have an SMT basically right now forming. As long as Nasdaq does not take the Asia or the London highs, we have an SMT forming. Which means at some point, look how far the previous day high is for this. Okay. And then look how close it is for this. Right? So just make sure here. So we'll see if this SMT means anything or not. I think I might start trading live from either Monday or Tuesday, just to start doing it again. SMT from there to there. We look at the 3, the 2. We have a sweep of liquidity. We have not touched that. Look at the 3, look at the 2. Okay. Get rid of this because people are confused. Okay, we've just shut up. So those who would have taken the retest entry over here would have at least gone to break even. But the target is previous day highs. That's where we have our target there. Target is previous day highs. Du-du-du-du. Well, let's see. SPX got a bit of a ways to go. Nasdaq, I expect to come up and touch previous day highs, but it has swept a bunch of liquidity, guys. You look on the 15. Yeah. Ideally, you would want it to come and sweep this high. Then we can look at a potential short or a continuation. Rid of that because we know where the target is, previous day highs. This might be going up and down here, but I still truly believe that this might come all the way down here first. doesn't look like at the moment we're going to get any decent call outs, guys. Get rid of that. That's just going sideways. You would need a push down to sweep this liquidity or that liquidity here. Create a fair value gap, inverse it on the way up for an AMD model or power of 3. But then you've got news coming soon, so 20 minutes you've got red folder, not massive, but there is news coming, so yeah. So we want this to go down. That was the point I was making earlier. How you trade this on the way down, if you decide to trade this on the way down, is entirely up to you. Me, I was just putting the entry here, stop loss there, and saying that that is the trade that's, well, the direction that I thought the trade was going to move down to. I should have just done this. That way people don't get confused. Okay, so now we're hitting previous day highs. So now we start looking at potential continuations. You see how this hasn't, so there's an SMT until it oh, come on. Come on, come on, come on. So we have accumulation, manipulation, hopefully, and we'll hopefully get some distribution. That's so if this candle shoots up and closes here, leaving this fair value gap here, and then comes down and inverses this fair value gap, we could potentially see a move down, even though everything is bullish right now. That is just my opinion, and I'm sticking to it. Let me do the same thing here so people don't get confused. Okay, this. So we want it to come here. A little bit ugly, but yeah. So people are not confused. Is there a potential short? See, if it consolidates here, that's not good. You don't want it to consolidate there. No, man. Don't inverse the fair value gap now. You want it to do this, guys. Needs to push up and then come down and inverse the fair value gap. Not from this area. Not from there. I would not take this. Simply because we did not sweep previous day high. However, this is dumping because of Nasdaq, so are we swept liquidity.
Going down, Granny and everybody. Oh, so she's not going now.
What happened?
Okay, we're going to go down and get Granny's cat balls. And then we're going to get a couple of things for Sam or for a few things. And then we're going to go down later at 6 o'clock.
Get back.
In the car and we're going for a joyride. We just made it.
Okay. I've taken nothing so far, Kyle. I don't know why you keep telling me how many I've taken, and you know I'm not taking anything. This is what I was hoping for, but yeah. Euro, I'm hoping for it to come down to this level. AUD, I'm hoping for it to come down to this level. I had to make this clear because somebody thought I actually took a trade. They came on and asked me questions about it. All because I drew up a trade where the stop loss was over here. When in actual fact, I'm just interested in price coming down first to see what happens here. So I think in the future, I've got to make it clear. I got to like spell it out, make it crystal clear so people understand. This is not a trade I would take. All I'm saying is that I want price to come down. This is where I would have taken if it had taken the previous day high, which it did not. Okay. What's up? Thank you so much for the follow. Okay, we have an inverse of a fair value gap here. The liquidity sweep is not what I was looking really for, but it has swept London high and Asia high. So as a general rule, 3 minutes, 2 minutes, 1 minute. Okay. The problem is the stop loss here, okay? Everything has, so if you took this, boom, you would do this, okay? At least up till there. Okay. If you are comfortable having a bigger stop loss with this trade, you could go all the way to previous day highs, right? That's if you want to keep it as safe as possible. But the bodies there, we'll see. But that should be an interesting. We've swept previous Asia, previous London, or current Asia, current London, respected a fair value gap. So there's a lot of reasons why this could work, except we just didn't take the liquidity at the top. Okay. So let's see here. That was New York. New York. See this, guys. New York. There. There. Look at that SMT. Right? Not the biggest and best, but I don't like that we didn't sweep the previous day high. So if you are comfortable putting your stop above the previous day high, that'll be the best way to cover your trade. But this call out is, it is what it is, I guess. It's inversed on there. On the did it inverse? Ooh. Hang on a second. We didn't get an inverse there. So we almost inversed on all the time frames. So that's really not something that we would like to see. So respecting a fair value gap, swept Asia, London, Asia, London. So it's taken liquidity. Previous highs are still there, which is one of the reasons why if this fails, it's because of that. News in 2 minutes, like Khan says, so manage your risk if you did take something, yeah? Or we'll just take a L. Like, this would not matter to you. I really wanted the previous day high to be taken on NASDAQ. As I said, as we place the trade, guys, if you wanted to be safe, completely safe from this, you would put your stop loss above the previous day high. Your risk to reward will be absolutely atrocious, but at least you would be safe. This was the target from the beginning, guys. So I hope nobody entered into this one. This was just a call out that I did, because we had inversed on all time frames on NASDAQ. We had respected a fair value gap. We had swept a bunch of liquidity, even though it wasn't previous day high. And unfortunately, I didn't go through all the time frames. Looks like the 3-minute got respected here, which is not good. That would be a red flag. 2-minute inverse, 1-minute inverse, 5-minute inverse. Literally every single time frame was inversed except for the 3-minute on ES. So this trade could still work if you entered into it, depending on where you put your stop loss as to where you would still be in or out this trade. It's up to you. We would have still been in this trade because it did not hit the stop loss yet. And if you felt nervous or uncomfortable or scared, you can get out now if you want. You'd be in profit or you would be at break even or whatever. If you still believe that, like I do, I still think it's going to come up here and take previous day high, then you can exit this trade now. There's news now. This is news happening. So literally anything can happen. My point with this was the short trade is my point. The entry is another story. But it's the idea of a short here. And the reason for it was there was accumulation, manipulation up, okay? Left the fair value gap. It inversed on all fair value gaps besides 3 minutes, okay? There's two downsides to this trade. One is that we did not sweep the previous day high, and two, news was at 10 o'clock, so we were right next to the news when we called this one out. But like I said, if anybody's in the chat that was nervous about this, when you were in profit here, you could have pulled your trade at any point. You can do it now and it'll still be break even. So yeah, today hasn't been the best day in terms of clarification. So I need to make it extremely clear. And I've also said it before, guys. There's going to be many times where I will be completely wrong. I will be incorrect. My analysis will be way off. So off that you would think, is it this guy's first day today? That's how bad it will be sometimes. But when I say to people that I'm looking for price to get down to the previous day low, okay, I think from now on I'm just going to draw it like this. Because if I do put a trade and I say, this is what I'm expecting price to do, like I hope people are not just entering. Because if you enter, you're going to get wrecked. Okay, we'll see if there's a bounce off this area. Not the best reactions here. As I said, guys, I still think that there's a good chance that this trade's going to come up and take the previous day high. If it doesn't, it doesn't, but I have a strong feeling that it will. Do we keep a green record for the week, or do we just exit this and say, nah, screw it? Do I care? No, I don't. If you've been here the whole week, you know that it's been a green week overall. So this means nothing, even if it loses. This week you would have probably won. If I had to go back and look at all the trade or the call outs, you would have probably lost like 3, but you would have won like 6, something like that. Hey, thanks for the gift. Appreciate it. So that's why losing a trade like this is not really a big deal in the grand scheme of things. And recently I've been noticing NASDAQ and ES pump in a direction and just start consolidating. Like, see, it pumps down and it just went sideways. There's no real massive expansion. At least that's what I've noticed. Again, guys, when you see me do things like this, it's entirely up to you whether you decide to take anything that I put on this chart. As I am not a financial advisor, sometimes it will go against exactly all these signs, like bullish, and I'll put a short in, right? This is just a guideline. This is not set in stone. In a perfect world, it will come up. This would have come up and swept this liquidity. Okay. Created a fair value gap on this area around here. Come down and inverse it. And then we move down. Then my stop loss will be up here. And my entry will be over there. That's a perfect world scenario. Okay. We did not get that. So this is not an A++ by any means. By any stretch of the imagination, this is not an A+. All time frames have been inversed now, right? The problem is that internal liquidity has been swept as well on ES and on NASDAQ. I would say this would be the liquidity target. So we haven't really hit that yet. So let's say for argument's sake, we stay in this trade. This will be your break even if it shoots down. That's if it goes down. Thank you, thank you, thank you. So Euro is not doing exactly what we thought it would do. So we close that. See? I'm not Nostradamus. I can't predict the markets. We would have loved it to come down. But there's no set rule that says it has to. Let's just get rid of this as well. Look at the 15, look at the 5. See how it's just consolidating? At this point, you would either cut your trade or something. When it gets to break even, you either cut it if it keeps doing this. Me, I'm just leaving it like this because I know it's coming back up here to the previous day high. I already know that. So I'm just putting this here just to prove that it doesn't really, who cares? It's just a trade. You're never going to have a perfect record. The signs are there that this could just go down. Like there are signs that are saying that it could go down. But there are also signs that are saying that it has not taken previous day high, that we are going to come back up for previous day high, and only and then and only then are we going to catch an entry down. Or I could be completely wrong and this could just blast through and just keep going. That's an option as well. So many times I would say I'm cutting the trade here now. And then as I do that, watch, I'll show you. Out. Watch what will happen now. This is just to prove something to you guys. This is just to prove something. Okay, we took that short out there, right? There was not an entry, but I'm just saying I took it off the charts. Watch what will happen. Watch exactly watch what will happen. Let us see, let us see, let us see. Okay, we have a bunch of accumulation. We have a 15 minutes. Euro. What did I tell you guys? You guys think I'm joking when it comes to stuff like this. You guys don't know. You think I'm joking. I showed you live. You guys think I'm kidding. I hope this thing melts all the way down so I can put my ghost there. Let's put him a bit far away, just in case. We'll put him over here for now. When this gets to this white line, we'll move him closer. When the price gets down to here, then we'll put him inside the potential trade. Like a game. Here's the start. And the closer this moves down, the closer the ghost gets to being where he should be. Or because you guys don't believe me. I'll put him there. Because if this starts moving up, then I'll move the ghost further away. We'll put him there as a starting point. Let's see. And hey, if today there's no like proper call-outs, when I lie, this one technically was a call-out, okay? So if you did take this trade, I'm just messing with you guys in terms of, yeah, that was the trade. So this is a call-out. I'm just canceling it, okay, because I want to prove something to you guys. So technically we have made one call-out. If you really want to get technical. So let's see if that would have worked or not. This wick is no good. Alrighty then. Remember, that's a target. This is the target. Let's see what it does. Price is just getting, how do I say this? Price is ranging today. It's not going to previous day high or previous day lows and delivering from them. At least with the pairs that I'm dealing with. This one might go here. GBP, JPY. It's just garbage. Garbage. You'll see, guys, there'll be days where it'll be a no trade day whatsoever. So we'll look at the chart, we'll sit here and we'll look at the charts and we'll literally almost draw up a few entries and then eventually decide, nah, and then it'll be a no trade day. That is going to happen. Like this one would have been much better if this was a massive liquidity sweep. Like this wick was over here. On the lower time frames, there were candle closes above this line, and then we inversed a fair value gap coming down. That would be a lot better and a lot more reassuring, and I'd have a lot more confidence in this trade. Even though we are in profit right now, well, technically I didn't take this trade, but if we drew our trade on the chart, it'd be at break even now. Even if this trade goes down to here, it's still a risky trade because we did not take the previous day high. I'm trying to base a lot of my entries and a lot of my trades on the previous day high and the previous day low. Obviously, if there's internal and liquidity that is juicy and external liquidity that is extremely juicy, like for example, Asia highs, London highs, okay? This is a juicy level of liquidity, right? One of the reasons why I drew up this trade is because we swept that. So it doesn't always have to be the previous day high or the previous day low. That is just the best and optimal liquidity sweep. That's all it is. It's not that it has to. It's just that that is the best. So as I said, in a perfect world, this comes up more, sweeps liquidity, then inverses a fair value gap here somewhere, and we start to move down. Then your stop loss will be up here somewhere, your entry will be here, and then you start focusing on previous day lows. That's a perfect, well, that's an A+ AMD model. Okay, so we move the ghost a tiny bit back. See if the ghost catches us on this one or not. This is the Sean ghost. Cursed ghost. I'll probably I'll be on the charts for another half an hour, guys, and then I'm going to call it early because it is my mom's birthday today. I'm not going to be sitting on the charts all day. I'm going to spend a little bit of time with her, so yeah. So I've got another half an hour of streaming at least, and then I will be, regardless of what happens on the charts, and then I will be calling it a day. Have you taken anything, Khan? Let's look at gold. Gold tapped into an area of interest here. So this could be what we saw the other day. Into fair value gap, which is close to where the OTP level is. Into another fair value gap. Comes down and then just goes, thank you very much. I literally saw this twice. Once with NASDAQ and once with AUD. So the AUD one was, where was it? Was it yesterday? Get rid of that. Was it AUD? Was it AUD? Sure it was. Oh well. Let's see if gold decides to do that or not. Goes back a bit. They've taken my car. Where did they go? I think they went to the shop. I can hear my car opening and closing. Let's see. Let's see. This price action is shocking. This is decent. And that should have happened here. Should have gone down, down, down here, and then we react. Oh. Are you back?
So we're going to go down later and go and get the little bit that we have left.
Yeah.
Let's start with chicken curry tonight. I've got extra juices and ready for the side of that. We've got from the fire, we've got
Oh, well.
a little bit later.
Oh, thank you.
Just want to go tomorrow.
No, we'll go later.
Don't have to.
No. I've already told everyone, yeah. 5 o'clock, I'm calling it.
Okay. Feeling a little bit.
Yeah, can you bring one out, yeah?
In my fridge. Got 2 more. Have it up tonight.
Oh. Just remember, guys, I would never have stayed in this trade. I just need to make that very clear. This trade that I drew up here, I would have exited somewhere here because of this terrible price action. After the first couple candles, it needs to pick a direction. When it just consolidates like this, it's not good. So technically the one call out we made would have just been a break even, cancel. We haven't even done a call out today. Which is good because we've done, every day we've done call outs. Every day from Monday to Thursday, we have called out trades. Or I've called out trades for whoever wanted to take them. Of which you didn't have to if you didn't want to. But it's just my opinion on what I think the trades would do. And if hypothetically you did, this would have been an amazing week for you. Some of the callouts were a bit dicey. Some of them were legit. Some of them were complete crap. But overall, most of them were good. You've been in much, like your profit would have been, how do I say? Overall, you would have got at least 6 to 7 winning trades, and you would have lost maybe 2 or 3. Something like that. That there's no call out today, that there's a 1 to 3 like yesterday. Price action is just dead at the moment, guys. I'm actually thinking about calling it early. Look at this. It's just dead. 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 The only one is really speaking is this one, but there's no fair value gaps. Plus, it's just a sweep there. It's not convincing. Definitely not convincing. It's accumulation, manipulation down. I think at this point we're just trying to trade for the sake of trading, or call out for the sake of call outs, because we're looking for a convincing sweep. This is barely a sweep. So on paper, technically, that is a AMD setup right there. Because you've got the accumulation, manipulation, and distribution up. But you would prefer to have that on the 5-minute time frame or the 15-minute time frame. But you don't, you see. Accumulation, manipulation, and you would have loved to have a fair value gap here somewhere for the distribution up. So yeah, guys, I think I'm going to call it there. It's my mom's birthday. If you entered into this trade, I would get out of it right now. You would be at break even. We'll see if the ghost is going to come here or if it's going to disappear. But I'm going to leave it there. Well, thank you so much, guys. Today was uneventful. Today was basic. It is a Friday. Mondays and Fridays, generally speaking, as my mate Khan would say, are not very exciting. So, yeah. Anyway, guys, have a good one. Enjoy your weekend. I'll see you guys on Monday.